Now, joining us for a discussion on filling the vault, stockpiling and mineral security, please welcome Managing Partner at Hartree Partners, Jason Lemme, Chief Banking Officer at the Export-Import Bank of the United States, Brian Greeley, and Head of U.S. Corporate Affairs at Glencore, Seth Levey. Moderated by Executive Director of SAFE's Center for Critical Minerals Strategy, Abigail Hunter.
Hello again. Good to see you guys are still awake. On April 4th, and China's export controls on rare earth magnets and key magnet inputs halted production lines for just-in-time manufacturers in the United States and Europe, fully exposing the leverage that Beijing has over supply chains for critical minerals, and seemingly my Roman Empire, because it's all I want to talk about on stage with you guys. As inventories dwindled as a result of this action, companies were forced to rely on case-by-case licensing with support from the US government, revealing a fundamental gap in our US toolkit. There was no immediate lever to pull to stabilize supply and support industry in real time, until now. Project Vault is designed to fill that gap, because while actively flowing and diversified mineral supply chains can and should be the goal, they will take time, and meanwhile, manufacturers cannot wait. So I'll start with you, Brian. I think just about everyone in this audience has at least maybe heard of Project Vault, but people are very hungry for more details on how it's going to function, what it means to work as a private sector entity, how it may work with producing companies, and how manufacturers can get involved. Can you first ground us in what the Vault is, what its primary policy goal may be, and where you see it going?
Sure, thank you, Abigail. So Project Vault, it solves a market failure effectively. So you have, every company out there should generally be stockpiling as much inventory as possible to ensure that they have continuity within their business and their production. But just the advent of just-in-time supply chains, as you mentioned, just the push from investors, Wall Street, to run their working capital as lean as possible, to have good balance sheet ratios, et cetera, leads to those manufacturers maybe not having as much inventory as they should. And part of what Vault was and how we sort of try to help solve the market failure was effectively create a giant balance sheet at the lowest cost of capital possible and invite those OEM manufacturer participants with just a very small upfront fee, basically unlock a lot of inventory that they could stockpile via Vaults using the government-backed balance sheet that could be there at the ready whenever they need it. So the immediate goal of Vault is to create that buffer, that supply shock, stockpile, for lack of a better term, so that they can draw down inventories if and when a black swan event happens, or we have restrictions on certain minerals, or whatever, that production lines can continue, Americans can continue working jobs, et cetera. A secondary aspect of it, though, is part of the Vault process is that these manufacturers are able to withdraw a portion of their minerals any given year, with the caveat that they have to replenish dollar for dollar, either the mineral that they pulled out or a different critical mineral if they want to rebalance, or whatever they so choose. But as part of that, the replenishments will be sourced domestically where available, where possible, then in allied nations where possible. And so part of the Vault thought process is this will help create a demand signal, an off-taker for domestic producers, allied producers, to help build up that supply chain in friendly nations.
Just to stick with you for a second, you obviously have trading agencies who we'll hear from on stage, you have the government involved, and you have these manufacturers who are going to be acting as participants sourcing these materials. Maybe you can kind of dispel this notion. No one's making a profit in this, right? So
yeah, so
functioning.
I do want to highlight, it's a public-private partnership, and Vault itself is a private independent company. We as EXIM have a board observer role, but this is operated sort of at the behest of the manufacturers with an independent board to manage risk in terms of OEM concentration or mineral concentration and the like. Our debt is obviously at a capped interest rate. The preferred equity, our investment partners there, that's at a capped coupon rate. Actually, the OEMs themselves have a share of the common equity pro rata with their commitment into Vault. And effectively how it works is that as part of the carry fees in Vault, we're building an equity reserve. To the extent that equity reserve is never hit, those monies go directly back to the OEMs. It's sort of a refund, if you will. So really the vehicle is operating at cost and all benefits really accrue to the manufacturers.
Kind of reminds me, instead of like a B Corp, that's kind of a social entrepreneurship metric, it's an S Corp. It's operating for the security of the United States and for our manufacturers. Jason and Seth, I want to bring you into this. From your perspective, what is the value of working with trading organizations like your companies in this space, and how can you support the government in bringing that expertise that they wouldn't necessarily be able to replicate on their own? I always say we're not going to solve minerals problems by having 1 million geologists, mining engineers, experts in the government. We need to have that private partnership. Jason, I'll start with you for a one-on-one.
There's a lot of above-ground issues too, but let me demystify or maybe define what it means to be a trading firm. And I'll sort of go through the supply chain of a commodity, really any commodity. If you look at it, you're going to have mines or oil wells or coffee plantations or whatever it is. There's a process of gathering commodities from where they're produced, which is going to be in many disparate locations all over the world. They get transported, they get processed, they get stored, and then they get marketed to the end user. A trading firm, we operate between that producer and that consumer. So that exercise is very logistically intensive. We have tremendous scale. We have 50 offices worldwide. We have institutional know-how. We have 5,000 employees. So we have a lot of highly skilled human capital, and we hope that kind of continues generation through generation as you train people up. But most importantly, it's also a very working capital intensive business, right? You are buying from people, often on a prepay, you're financing them, you are holding that material, you're often financing the processor to some extent, and then you're selling it to an end user that often wants credit terms. And so there's a tremendous amount of capital involved. And as you can imagine, it's a commodity. They often are also very volatile. I always say that the harder it is to store a commodity, the more volatile it is inherently, right? That kind of makes sense. And so your capital needs also swing wildly as a result of that. I want to point to 2 examples of our activities in the last year or 2. One is one we did with EXIM, where we were able to offer LNG cargoes to Egypt. This deal was publicly announced. And in a sense, it was a way where EXIM helped us was to break a market failure, and that is to be able to help us offer superior credit terms in order to move US LNG into a high market share situation in Egypt. The other deal I want to talk about was strictly a private-to-private deal, and that was when IMC was looking to build a copper rod mill in North Carolina. We provided the project financing, and we continue to provide the working capital for that facility. So we're talking about $400 to $500 million of financing in one way or another to that sort of activity. And that's basically how I describe the trading industry. And we are, as far as I know, the only American trading firm that does this across what I'll call our 3 verticals, which are energy, think oil, LNG, LPGs. Then we also do this in metals, critical minerals, the bulk metals, and the minor metals. And we also do this in agricultural products worldwide.
Yeah, it seems challenging to duplicate the competencies, the people, and the logistics that you're describing to be able to support what is clearly an industry need. Seth, Glencore is both a miner and a trader, and so how are you guys supporting the government with the reach, expertise that you bring to the table for this initiative?
Sure, thanks, Abigail. As Jason mentioned, trading is logistically highly complicated. With Glencore, you add another layer or 2. We're also one of the world's largest mining companies. So really, we're able to use our unique model and take products from mine all the way to the market, and also on the back end to recycling. And so we think Project Vault, there's going to be a lot of opportunities to really buttress our global mining supply chain, obviously our trading platform, and even possibilities around recycling and manufacturing. So I think if you look at our unique model, we're going to be able to see a lot of opportunities we haven't even considered yet because of this unique P3 that was set up through the EXIM Bank.
And this is a pretty creative, novel partnership that you have, that the government is supporting for private sector players, but to what extent is it similar to the National Defense Stockpile, the Strategic Petroleum Reserve? We're always trying to kind of look backward to understand where we're going, and so maybe you can give some clarifications for that, why those weren't similar tools or the right tools, Brian.
And I want to highlight, I think the main difference is this is led by the private sector. We are not, we as EXIM Bank, we as the US government, we aren't dictating anything that's going into the vault. We are relying on the manufacturers themselves to come to us, and they are going to tell us what they want us to stockpile. So it is, if they want to pull stuff out, if they want to rebalance, if they want to store it in an oxide versus an end metal, it's completely up to them. We are working at the behest of the manufacturer for whatever makes the most sense to them. It's different, obviously, than the National Defense Stockpile because we aren't out there saying, I want this much of this much of that. It is truly a reliance on the manufacturers telling us what to purchase. And I guess in terms of something like the Strategic Petroleum Reserve, another big aspect of this is you don't have a government bureaucrat saying, let's empty this thing to make a profit or to make prices cheaper or anything like that. It's whenever the OEM, if there's a market emergency and the OEM requests it, they get it. But otherwise, it's again, up to the OEM whenever they want the mineral.
And maybe the two of you can kind of jump in, and particularly, Jason, you talked about how you work in the traditional energy sources, oil and gas anyway. What's the comparison? I think, again, people like to say minerals are like oil, but we know when we take a rock out of the ground, it doesn't have that immediate value. And so you can kind of give us a bit of a differentiator in market dynamics and why this deserves different treatment as a result.
Sure. I think there are, if I think about it, there are probably like three major differences. One is, in energy products, there's often or somewhat substitution between them. So when they trade relative to one another. But no one's going to sit there and trade the niobium-gallium spread, right? So in metals, every metal has its own story. It might come out of the ground in a similar way. The processing might be similar, but it has its own supply-demand fundamentals and geopolitical risks associated with each one. The other one, which, just when you think about it as a consumer, whether you're a corporate consumer or an individual consumer, is energy products are, I think of it as like a stock versus a flow issue, right? So energy products you consume daily as part of your daily OpEx, right? Whether you're driving to work or whatever it is, or you are, heating your home or cooling your home. Whereas metals are part of your CapEx. They're part of the capital items you buy generally, whether it's your phone or a vehicle, right? So you notice it when you're in the market for one of those things. And how you address price rises or in energy is very different from how you address price rises in metals. In fact, we're sitting here having a discussion today because we don't notice it for a long time, right? And then the other thing I wanted to point out, which I was thinking about this yesterday as I was listening to people speak, and that is one thing that I think cannot be overstated when it comes to the shale revolution in energy was how robust price discovery was down the curve, right? You knew what the energy price was going to be for the next decade. Whether you could successfully hedge it, that remains to be seen, but actually what happened was capital came together, banks were able to offer hedge products, and what you wound up was an ability for the capital markets to solve the way to get down the cost curve in shale and eventually have massive production growth and very short supply chains and a very reactive market to supply-demand balances. And it's what I hope happens and what I think can happen in Volt is that as you develop this stockpile, again, a private-to-private stockpile where the government's providing where the market fails, it is providing the one need, and that is who's going to hold the working capital? Who's going to finance that very expensive thing, right? If you're an OEM, you're not going to have several $1 billion of dead money at work, and I'm not sure I want to do that without getting compensated for it either. And so it solves that market failure. And what I hope happens is that as people shift their delivery periods in Volt, and there are needs at different months in different sizes throughout the period, and people move this, you create that price discovery, and then therefore you can begin to think about, as an investor, how you can have line of sight over investments over a long period of time.
And Jason makes a good point. I just want to chime in here is that as part of the vault participation agreement, participants are going to be able to trade their commitments. So if I have a big gallium commitment and I realize I don't need it anymore, I don't need as much, or maybe I just want to be advantageous and maybe, I don't know, another company really needs it. We're going to allow these participants to trade amongst each other, and those prices will be public. And we can hopefully create some market where you start seeing sort of an ex-China price for a lot of these more niche metals and minerals, and sort of create a market with physical domestic clearing. So,
and to bring to also come back, I mean, it is the case that many of these metals, especially the non-bulk metals, don't have anything really beyond their spot markets, right? Or there's no clarity over pricing. And so the longer you can get clarity over that, the more you can think about investing.
One other thing, when you talk to the eventual end customer and the end constituent of the US government, they had 2 touch points with energy prices historically, right? Gas pump, power prices. I think we can add a 3rd point, which is continuous, and what Jason mentioned as well, in terms of the OpEx of owning XYZ items. We saw with COVID and supply chain shocks that when you can't get something and the price goes up and inflation starts impacting your bottom line, you start pulling back on certain products. We're going to start to see that, or could see that, depending on supply shocks in the future on things like automobiles, phones, et cetera, things that are not really optional anymore. And so I think there is that 3rd touch point as well. And so I think structures like Vault are going to help smooth those out for the eventual end customer. So the benefit, of course, is to the OEM, but it's also to all of us as the end customer every day.
Yeah, incredible points across the board. I would just emphasize again, you're never going to have a situation where you're filling your EV and kind of, throwing your fists in the air complaining about the price of lithium. There's not the transparency in those markets to be able to have that, but also there's this lag, as Jason talked about, when we had the germanium and gallium export controls, for example. Defense manufacturers felt that pinch a year and a half later because of that mine to market, all the logistics steps we're talking about here. And to Seth's point, it kind of becomes incumbent on these manufacturers who are selling to the consumers to be able to make sure that we don't have to pass those prices on, and that they're also just resilient. One point, Brian, that you haven't mentioned yet is just in talking about this trading of these materials, often we hear in this conference, there's these leapfrogging opportunities with technologies that maybe allow us to use different subsets of minerals or alternatives. And so how does the vault kind of deal with potential obsolescence and how they can essentially play out tech changes?
Great question. I mean, look, again, our guiding light here is how do we benefit the manufacturer? Because if we benefit the manufacturer, we're benefiting the American workers that are working for those guys. Let's say, I'm just going to make it up. Let's say there's a bunch of lithium stored there and the battery technology moves to a different way, some different metal, whatever it is. They can just liquidate all their lithium and just put a different critical mineral in. We're not holding these minerals and forcing them to hold it. It's at the end of the day, what is useful to you, the manufacturer, let us Vault hold it for you at the lowest cost possible to ensure that you have some steady supply. And if you don't need it anymore, great. Let's dump it and find another metal to put in that is more important to you.
So maybe sticking on kind of this manufacturer's point, because that seems to be kind of the guiding raison d'etre of the vault. How can you make sure that the material that you guys are going out in the world and sourcing for the vault participants are the usable materials? We have a lot of transparency issues in these supply chains where people don't always know where they're getting things from, and also that they're maybe most exposed to the last component part that they get that is mineral rich, mineral intensive. So how does that work from a tolling perspective with the participants and with the trading houses?
Yeah, I mean, look, at the end of the day, we store whatever the OEM asks for. But we can also store, like if, for instance, maybe their magnet technology may change, but the mix of, like, say, NdPr may change. Okay, let's hold the oxide, and then we can find a refiner partner to then refine that oxide into whatever mix of Nd and PR that you need. So it's truly at the behest of whatever the OEM wants in terms of what spec, honestly, what mine it comes from, what producer. It is truly like, hey, you give us what to buy, we buy it for you.
We have a bit of a kind of interesting international example to that end of how we've worked with end users to be able to access materials. And that's been as a result of other painful supply crunches at China's behest. Jason, maybe you can give us a bit of an example of Japan's history here, illuminate how that's functioned and how it's kind of pulled back all the way to the supply side in terms of support.
Sure. I will be very general about the role the Japanese trading houses have played in helping the home islands. But if I think about different development strategies, the one there that I think kind of sticks out is that the equivalent of the EXIM bank for Japan, the Japanese EXIM bank, really helped provide competitive financing for upstream energy and mining projects. And what that did is it didn't always mean that Japanese trading houses won the deal, but it got them in the room. And when they did win the deal, it did give them line of sight on a material that they could now then use for their manufacturing processes back home. And so if you think about sort of the Dream Development Program, once you have your hands on that material, you can create the upstream, the downstream processing, and then you can create the end-use product from that too. And so if you think about the conglomerates in Japan, they're all very active commodity traders as well. And that continues to this day. And they're involved in everything from the metals markets, but you see them trading pipeline gas in North America to marry up with their LNG contracts that are then going to supply utilities with winter fuel during the Japanese winter. And they also take out storage in the US and things like that. So they really are very good at managing the whole supply chain through their trading businesses.
And while, again, I think Project Vault is quite innovative in what it's doing from a private sector to private sector part, as Brian has emphasized, it's good to know that there are other countries that have grappled with these challenges and taken somewhat similar approaches, anchoring them in their own manufacturing base. Helps a lot, I think, for kind of policy durability. And Seth, I want to kind of bring you in on that point. As a miner, I think we're constantly hearing from folks like you about the long-term timelines that we have to deal with, multi-decade, translating across many different government administrations in the US, but also internationally in the jurisdictions you operate in. What about the policy durability of this? EXIM is up for reauthorization this year. How are kind of conversations on the Hill going, and what else can we do to kind of make sure that this positive momentum is maintained?
Yeah, if I put on my miner hat, we have a project in Minnesota, New Range Copper Nickel, that's been in permitting on and off for 15 years. We spent $1 billion, very exciting project, a lot of opportunity in the Iron Range of Minnesota. Putting on my trader hat, you have to think about, how are these new systems that we're setting up through the US government going to remain in place for 10, 20, 30 years? The Japanese are very strategic. The Koreans are very strategic. They're great partners. How do we make the US a great partner in the same way for some of these trading mechanisms and these public-private partnerships? So I think the role of Capitol Hill is going to become very important as well. It sounds like folks on both sides of the aisle are very, very supportive of Vault, which is very positive. I think we need to see some more legislation in the coming years as well to really memorialize these things into statute, just like we need permitting reform in order to get mines built. So again, you're going to need both ends of Pennsylvania Avenue active on this.
Yeah, Brian, did you want to mention anything, especially with the
Yeah, I mean, well, so at least for Vault, what we did was the participants are making 10-year commitments, and our debt's there for 15 years. And so hopefully this will last multiple administrations, and if and when they need to renew their commitments, our debt will be there, so you're not refinancing everything all at the same time. But at the end of the day, look, from my perspective as well, if in year 8, 9, 10, if this thing has done its job and no one wants to renew, hopefully we've done our job and we have a flourishing supply chain of these minerals and we're just flooded with them in the free world, if you will. I'd be happy, but I think there may always be a need for some type of rainy day fund, if you will. And so hopefully this thing solves a need and people see the need for it, and then hopefully, as Seth mentioned, Congress can make some legislation that'll help the entire industry, the entire supply chain of America better. So,
and that kind of concept of we really want to solve these problems and have companies take into consideration this resiliency premium, security premium, as Ambassador Greer called it last week in Financial Times. if I may, to all of you guys, how does this Project Vault initiative fit within kind of the broader, very, very robust government ecosystem for critical minerals that the Trump administration is pursuing? And I think it has an incredibly important role to play. Don't want to see scope creep into these other buckets where we also have challenges we need to tackle, like permitting, as Seth alluded to. But if you can maybe just speak to the bigger picture.
I mean, one thing it does is it buys us some time. So it immediately buys us some time where we're not immediately at risk if something bad is happening in the next few months. But then interestingly enough, is the amount of demand aggregation we're going to have through Vault can illustrate, at least to EXIM and various partners in the interagencies, like, hey, here's where the demand is. Let's really focus our investment efforts to solve this problem so we're not importing this stuff, we're developing it domestically. And that's where partners like Hartree, like Glencore can be real big players in terms of identifying those opportunities, and even in Glencore's case, digging them out of the dirt. So I think it buys us some time. It provides us that demand aggregation that we need to then go and make these investments and feel confident that there's, one, going to be an off-taker via Vault, but then two, hopefully spread these minerals to the broader market, because we know if at least this subset of OEMs need it, there's probably a lot more OEMs that are down the line that may need it as well.
I will say, you don't know where these efforts go, right? I don't think we ever want to be in this situation again in terms of feeling so exposed. But at the same time, when you have an initiative like this, it's usually the little things that begin to add up over time. And what I mean by that is you don't know where the entrepreneurs are going to come from, right? You create the mechanism by which capitalism can work, and then people will find opportunity, and when something strikes, it will grow rapidly. And I can't tell you what that's going to be yet, but it will happen. And by creating this, you'll create I'll call it the marketplace for that to begin taking place.
Seth, any additional thoughts?
Yeah, I think, look, the general tone and tenor of the U.S. government has had, as we've seen over the last few years, it's been a great shift. Both sides of the aisle, both sides of Pennsylvania Avenue, I think there's a lot of opportunity. We're very excited about the various programs that we've seen, beyond Vault as well. We have the MOU that we just signed through the State Department and DFC with Orion CMC for our DRC assets, which are the Western world's largest supply of cobalt. I think you're going to be seeing some innovative things coming over the next couple of years out of other agencies as well. So I think that interagency connectivity is going to be important. And I agree. I think Vault is going to, 1,000 flowers bloom from this.
Yeah. I really cannot stress enough the chicken and egg when it comes to the demand side and the supply side for this. You can have an incredible minerals project, a great deposit, tier 1, and it won't necessarily work unless you have someone who's willing to buy it. You can go to the bank and they'll turn you away time and time again. And so the ability to be able to have a potential off-taker to help create this alternative supply chain is key. It also means we need to cut ourselves off from the addicted cheap supply that we have today. That's where the 232 investigation into processed critical minerals and derivatives comes into play. And we can't do everything at once. We need these alternatives to be online, or we wouldn't need the buffer, as Brian said, for these supply chains, for our manufacturers. We have to time this, sequence it incredibly carefully so that we make sure that our manufacturers are not being punished for no alternatives being available. So all of this is coming together in a confluence of great policies, and I'm very appreciative we got to hear what I think is a really, really important one today on stage from the government and then from the key participants in the private sector side who are involved. Please join me in thanking our panel, and thank you guys for being a great audience.
All right.